Hello and welcome to our channel. In this video, we'll dive into the advice of 7 legendary investors, specifically tailored for young people. Whether you're a college student, a recent graduate, or simply looking to strengthen your financial future, these tips are just for you. First up is Warren Buffett, often called the Oracle of Omaha. His most crucial warning to young people is, stay out of debt. High-interest credit card debt in particular can slow down your wealth-building journey. Buffett insists on not spending more than you earn. If you already have debt, focus on paying it off, and if possible, steer clear of credit cards altogether. Billionaire Mark Cuban echoes this sentiment. If you don't have the cash, don't buy it. Second, we have Charlie Munger, vice chairman of Berkshire Hathaway. Munger emphasizes that your first $100,000 is the hardest, but also the most critical milestone. The first 100,000 is a bach, but you gotta do it, he says. Until you reach that amount, save as aggressively as possible. Yes, it may mean lowering your lifestyle temporarily, but Munger believes that once you've built that initial capital, compound interest kicks in, and the snowball effect makes your money grow. Mark Cuban also supports this approach by suggesting you live like a student early on. Third on our list is André Kostolany, a stock market philosopher well known across Europe and the United States. Kostolany advises young investors to combine passion and common sense. While it's good to invest in sectors you truly care about, don't overlook market research and a company's financial standing. Passion alone isn't enough. You need a rational mindset and steady decision-making to avoid unnecessary risks. Next is the legendary Peter Lynch, who managed the Fidelity Magellan Fund. His motto? Invest in what you know. Lynch encourages young investors to start by examining the companies behind products and services they use every day. But remember, liking a product by itself isn't sufficient to justify an investment. You also need to look at financial reports, growth potential, and the company's competitive edge. Now, let's talk about Ray Dalio, founder of the world's largest hedge fund, Bridgewater Associates. Dalio believes that a well-diversified portfolio is key to success. Don't just invest in one asset class. Spread your money across stocks, bonds, commodities, and maybe even crypto to balance risk. Because the future is uncertain, this diversity protects you when one sector takes a hit. Moving on to Mark Cuban, whom you might recognize from the TV show Shark Tank. Cuban advises young people to be extremely frugal. He says skip the small luxuries, save every penny, and even consider cutting up your credit cards. He himself once slept on the floor before becoming a billionaire, living a very modest life so he could have the cash on hand to seize big opportunities when they came. In Cuban's view, true wealth building requires that kind of discipline. Finally, we have Robert Kiyosaki, known for his book Rich Dad, Poor Dad. Kiyosaki believes many young people make the mistake of only doing what they love while neglecting to invest in the fields they're passionate about. That means using a portion of your active income to buy assets, like real estate, stocks, or even your own business ideas, so you can build passive income over time. In other words, don't just earn money, make your money work for you as well. Yes, these 7 investors may emphasize different angles, but their core messages overlap. Avoid debt, build initial capital, invest in what you understand, and diversify to spread out risk. If you found this video helpful, please hit the like button and subscribe. Feel free to share your own savings and investment goals in the comments. Let's learn and grow together. Take care, and see you in the next video.